All right, let's kick this off. Good afternoon. My name is Miguel Kudry. I'm the CEO and co-founder at L1 Advisors, where we enable fully on-chain wealth management. We do that by allowing financial advisors to work with self-custodied individuals and allow them to receive financial recommendations and transaction recommendations on DeFi protocols without ever having to give up custody of their assets. So let me dive in a little bit of history on how this all came together. Basically, I've been working in crypto since 2016, but before that, I was working on the wet point 1.0 to 2.0 transition. In 2013, I was working on an online tutoring marketplace, and we had tutors from 40 different countries. And naturally, we were looking at paying those tutors, and that's how initially I started looking at Bitcoin and then Ethereum. And then in 2016, I started investing in crypto and built my first startup with my current co-founder. It was a non-custodial wallet for Bitcoin and Ethereum that had a chatbot embedded in it. And this was before DeFi and before GPT-3, so we were a little bit early to market. After that, I ended up joining, did some consulting for Dapper Labs, and I was at Bitso for 3 years. And so over the last 5 and 6 years, I've been focused on bringing people into crypto. So bringing newcomers and helping them get educated. And over time, these people become more invested. And what we see is they tend to go with self-custody. They tend to go entirely on-chain. They dive into DeFi. And their needs change fundamentally. They start to need support around financial planning. They start to need support around tax planning. And I also went through that process myself as someone that has most of their assets, most of their liquid assets on chain. I tried to, over the last few years, start to make some better decisions. So these are the two full crypto cycles that I've been through. Which means that I've made twice as many bad decisions over the last few years. And I wanted to essentially make better decisions. And as I did that, I tried working with different financial professionals, financial advisors, certainly CPAs for my tax planning. And I was a bit frustrated because they just didn't have the tools to work with someone like me. And I mean, some of the things that I would hear were like, okay, come back when you've sold your tokens, and we'll get you set up on a brokerage account. Or they would give me a list of things to do to diversify away from crypto that had absolutely nothing to do with me as a crypto native individual or my assets. Some people would even suggest that I should look at gold because I liked crypto. And some of the advisors that I would speak to gave exposure to crypto to their clients through hedge funds that, I mean, they didn't really know how they operated, and we know how some of those stories ended up, unfortunately. And it's no surprise then that almost 60% of financial advisors in the United States report having clients that are investing in crypto on their own. Many of these are self-custodied individuals, and so the needs of these investors are actually not being met by their financial advisors who are currently managing their traditional assets. And so there's a huge opportunity here. And that's precisely what we want to fix. So we are on a mission to help crypto native individuals make better financial decisions. And we have to do that, and we have to meet them where they're at. They are on chain. Most of them are self-custodied. Most of you are self-custodied. And so financial advice, wealth management should not be any different than using our favorite protocols and our favorite dApps. So here's how we envision it. You should be able to connect your wallet. Immediately, you should be able to connect with financial advisors. And right away, you should be able to get DeFi native transaction recommendations without you ever having to give up control of your assets, without you having to move assets around or trusting someone with your assets. And so that's what we're doing. That's what we're building. And so L1 Advisors is an interface between registered investment advisors and other financial professionals and their clients. Clients can be individuals like all of us. They can be DAOs and their treasuries. And so we allow these advisors to basically build transaction recommendations directly on DeFi protocols. This is a great way for them to tap into a really powerful set of financial products and services, powerful liquidity. And we're not reinventing the wheel. We're plugging into what's actually proven to work. Centralized platforms have blown up over the last couple of years. Over the last year, it's been turbulent. But DeFi protocols haven't. Anyone can see what's going on. And we want to bring that transparency to the world of financial advice and wealth management. And so we're very excited about 3 opportunities. The first one is the massive shift towards self-custody. I think everything that's gone on with the centralized lenders, a lot of the new regulation that's coming for custodians are making people more and more interested in self-custody. So huge opportunity. This is only going to continue to grow. Then you have DeFi native advisory. I mean, why build new products for advisors where we can tap into DeFi? We can get really good at being that interface and providing great user experience for advisors and clients alike. And then last but not least, very related to the last panel, we're very excited about not just crypto as an asset class, but asset classes being crypto. I think there's the next 10 years, we're going to see all of these assets coming on chain. And I mean, guess what? Financial advisors are responsible for hundreds of trillions of dollars. So those assets are going to come on chain, and we want to be the platform that they use to provide advice on those. So let's dive into a demo. So we just launched our product about a month and a half ago. We're in private beta with 5 RIAs, and this is what the product looks like. So I'm going to show you what things look like for a client. And then we're going to show you what they look like for an advisor. So this is a client that just signed in. You can go to l1advisors.com and connect your wallet. We allow people to connect multiple wallets to their account. And so this is why we request a local message to be signed, just so that we know that you own that wallet. As soon as you sign in, we pull all of your assets across all of your wallets into a single dashboard. We show you your assets in your wallet. We'll show you assets locked in any protocol. We'll show you NFTs, and of course your aggregated net worth. So at the surface, it looks like a DeFi aggregator. But then there's a few layers to it. The first one is our risk score. So it's a score from 1 to 100 that looks at chain and protocol risk, as well as fundamental analysis. We also allow you to create goals. One goal is tied to one wallet, and so that way we can track how you're doing. This is the foundation of financial planning. And then on the right-hand side, you can see your advisors. These are people that you're working with and that have access to your portfolio, read-only access. And you can chat with your advisors. You can share files. And now let's flip back to an advisor account. So also, you can invite your advisor. So if you're working with an accountant, you could bring them on. So this is an advisor account. We're looking at all the clients linked to this account. And much like I showed you on the other side, this advisor has the same level of access to the information that we've shown you before. So the same dashboard. They can really keep an eye out for this client's portfolio. The same risk score, but it's read-only access. They can't actually move those funds. It's entirely non-custodial. Where things get really interesting is with our transaction builder, and this is how we interface between advisors and clients and DeFi. So you can see the client's wallets and balances, and we're going to put together a transaction recommendation for this client. So right now we support swaps and liquidity providing. We're adding new integrations every week or every couple of weeks on your favorite DeFi protocols. So we'll start off with a swap. So I want this client to have a new position. So we're going to swap some ETH for DAI. We are, for the purpose of this demo, on testnet, so the quotes are not going to make a lot of sense. But I can select which wallet I want this client to transact from. I can save this and immediately add another recommendation. So let's claim some fees because this client is pulling some funds or liquidity on a UniV3 pool. So we're gonna withdraw those rewards. And then we're going to take that and, okay, I can see how many pending rewards there are available. We're going to take those rewards and deposit them back into the same UniV3 pool. And so as an advisor, I'm abstracting all of the complexity away from basically having to figure out which protocol I should use, I mean, whether I'm getting any slippage or not, with the technicalities of the price ranges, etc. And so off I go. I'm sending 3 recommendations to this client. The client is notified. I can see now their pending signature. We're going to flip over to the client side. I mean, at this point, I would also check in with my client if I was an advisor. I can see that there's 3 new transactions, and we present them very simply and in a clean interface to the client. We tell them which wallet they should connect to so that they transact from the right wallet. And that's all they need to know. From there, they just click swap or whatever the transaction is. They sign. Again, the client is self-custodied. They are the only person with access to those funds. We wait for confirmation, and then that transaction will be marked as completed. And then that way, the advisor is notified that the transaction was confirmed. And so they will be able to do this with every one of these recommendations. Now, we are working on basically bundling these transactions together in the future so that instead of having to sign 3 times for each of these steps, you're going to be able to sign once for any number of transaction recommendations. And so ultimately, that's going to allow advisors to make pretty complex recommendations, even strategies across their entire book of clients. So we're going to be able to do some more complex recommendations than swaps and providing liquidity. But this is addressing already a pretty big need from what we've heard and what we see our RIAs and their clients working on. So once these transactions are signed, we tell the client they're done, and they are now marked as accepted and completed on the advisor side. Here we go. So they are accepted. We can check on Etherscan. We're on Goerli, so let's just change that real quick. And that's it. The transaction was signed. So this is actually going to bring the next 100 million and more, we hope, Americans into DeFi and crypto, which these people are already working with advisors. And I mean, hopefully for many of us here, we can get on the right track of making better financial decisions on chain. So we're excited to also talk to people building products and on-chain products and services for financial advisors. Let's chat about how we can integrate them into our platform. So for the second part of this talk, we're going to do a panel. And we're going to bring on Eric Tomaszewski, financial advisor at Verde Capital Management. And we had a last-minute addition to the panel. Come on up. Bryce from Ethereum Attestation Service. So grab a seat, guys. So why don't we start with a quick round of intros? Eric, do you want to kick it off?
Yeah, I'd love to. Happy to be here. My name is Eric Tomaszewski. I'm a financial advisor with Verde Capital Management out in Metro Detroit. And we manage several hundred million for clients. These are individuals, these are families, these are institutions. So this could be things like foundations, endowments, and even administering retirement plans. At a very high level, this is looking at not just stocks and bonds and even beyond that into different types of alternatives, but it's also looking at things like crypto, or let's call it digital assets.
Bryce.
Hey everyone, I'm Bryce. Nice to meet you all. I'm with Ethereum Attestation Service. We're a public good for making attestations on Ethereum. In its most simple form, an attestation is just an entity saying something about anything, and that helps build more trust. So in the example of financial advising, we can help build the reputation layer for how advisors build their reputations and how they trust certain contracts and systems to make those better on-chain decisions.
Excellent. So why don't we start off with the difference between a traditional advisor and an on-chain or a crypto-native advisor, I think there's things to be said both on how advisors are working with clients directly and how clients are trusting and finding out about advisors. Eric, do you want to kick it off?
Yeah, I'd love to. I think when you look at the difference between traditional and sort of crypto-native advisors, I think it's important to start at sort of the fundamental base layer. And what I mean by that is there are hundreds and thousands of different financial professionals in some form just around the US. If you break it down further, about 99% of that part of the industry, approximately, is made up of brokers and insurance people. They are governed under one rule, which is the suitability standard, which basically means that they are there to broker the deal. It is very transactional. The other side of the street that you don't really hear about is the 1% sliver. That is, in essence, what Verde Capital does. We are a registered investment advisor, or an RIA is the short acronym. We also go by fiduciaries, and that is arguably the highest standard within financial services. This is exactly what you would expect from, let's say, your accountant. Same thing would apply with the standard of care you expect from someone like your doctor. So we're very proud to announce that background, but I also want everyone to understand the distinction. Now, what's important about this dynamic? RIAs have the ability to traverse and look at things from a very different angle. When you look at a brokerage side, there are certain things that, from an agnostic standpoint, they can't be done. They can't jump onto a bunch of different custodial platforms. They also can't do everything with investments. Hell, they might not even be able to talk about Ethereum or Bitcoin, or even be willing to dive in because of compliance. From our standpoint, we have the ability to really dive into any topic known to man. If it's stocks, it's bonds, it's alternatives, it's helping you with an Airbnb, your business, or diving into crypto-native things like tokens. So I think that hopefully gives some context on this background.
Bryce, how would I come to trust a financial advisor? I mean, attestations on-chain, I can see them being directly linked to performance and previous interactions with a client or an advisor. Walk us through like how that works in the traditional world, which is based on a lot of trust, and how you see that changing on-chain.
So to build trust in Ethereum, you need to really understand. So there's the RIA has a registered database of advisors that you can trust. But when you venture into the decentralized realm, how do you actually identify who to trust and what to trust? And the way that we see that being solved is through relative trust. It's not so binary where someone might have a credential to be an advisor. It's a makeup of all their on-chain activity and their reputation that's built from the clients that they've interacted with. Maybe it's the complaints that people have made on the other side. So let's just say, Eric, I trust Eric right now, but what if for some reason he turns to be a bad actor and I need to attest to some sort of complaint and have that registered to help other people feel more safe to transact with Eric, even though he is registered in a database like that.
Cool. Anything to add there, Eric?
I do trust Eric, by the way. So.
I'm glad he trusts me. I appreciate that. I don't know if there's anything that I want to add. I think there's this unique dynamic with, are you using attestation? Is it soul-bound tokens? What is the dynamic? I think it's important for people who are being brought in on-chain, if there are going to be advisors there that are there to support you, for you to be able to distinguish how they're structured, what they've done, maybe how much they have in assets under management, how many clients they work with, so we can start to draw some form of distinction of, oh, this is preferable for me versus someone else. Same thing applies in like the traditional market. We can see how much they have in assets, we can see what they've done, we can see what people have potentially even suggested about them from announcing that they're working with an advisor. So no, I love this. I think it's well overdue. And
one comment, Eric. So trust is relative. So you might find different aspects of an advisor more trustworthy than others, but how you define what's like, how you value trust with that advisor is going to look completely different. And with these attestations, you're able to compose a really unique kind of like Lego-like structure to figure out what matters most.
Let's dive into non-custodial wealth management. That's the topic we started on, and non-custodial wealth management. So for people in the audience that are listening to this and who may be self-custodied and want to remain that way, how does it even work? How does non-custodial wealth management work? Let's break it down.
It's a good question. I think first and foremost, it's an acknowledgement that you as the end client have all of the control. Point blank, you have all the control. You are doing the final signature at the end of the day. It's just having an additional third party to give you some context on what you might not be considering within the whole dynamic of what's happening on chain within your assets, but also possibly what you have to deal with in your normal world. Like if you have a spouse or children, and really that's when you start to get more creative with all these different key areas of financial planning. But I'll give you a brief high-level background of how I would sort of go through this process with a prospect or someone that I just met, so you can get a sense of the step-by-step and imagine yourself being that person. The first part is basically diving in and having just a conversation. It's that simple. So being able to just get a sense of your values, your expectations, your goals, your vision for the future, what you aspire for, everything, right? This is very much about life fulfillment. So we want to get at the core of like, how do we tie your money to life fulfillment? That's far beyond just money. That's just a tool to do the things we love or the people we love, but how do we get more into the weeds? So from there, it's then diving into specifics on, okay, what are you working on with some of these different goals? And is it short term? Is it intermediate? Is it long? And actually, have you considered goalposts? If we don't have a goalpost that we're actually trying to strive for, the reality is we're just wandering around aimlessly, right? So it's being able to give you some context on how you could more define that fully, right? And if you don't have an idea, it's us being there to support you. It's also getting a sense on like what are previous experiences you've had with other professionals. And if you haven't worked with other people and this is your first time at 18, 20, 30 years old to speak with an advisor, it's being able to basically give your perspective on what are you looking for? What are you truly needing out of an advisor? So we can actually see if we could deliver on what you are intending to get from this relationship. And then from there, the more fun, I think, is getting into you grading yourself. So if you're looking at a 1 to 10 scale, 1 being Eric, I have no idea what the hell I'm doing, 10 being I have everything figured out, leave me alone, I like being 100x with my leverage position through my, okay? The reality is you get to grade yourself and define why you're that number, and then take it a step further for us to be able to give you some context on, okay, what could actually improve that? And then I would say last but not least, as you sort of entangle all of this, it takes it to the last part of basically saying, okay, now that we have this idea of what you're wanting to envision for the future and your goals and your passions, how do we put all this together and tie relevant on-chain, but obviously in our regular world as well.
Anything to add there, Bryce?
As Eric was talking, I was really thinking through when people are choosing their financial advisor, one of the things, can you hear me? One of the common things are the values that you have as well as the performance. So you might care about certain aspects like environmental sustainability or other things. You could attest to that as a value and then easily be matched more with advisors that have proven on-chain that they've actually shared those same values, as well as from the selection process or the discoverability for an advisor to find projects that also match your investment preferences.
Do you think? I mean, as somebody who's self-custodied, I have it's my power to basically choose which application has access, read-only access to my assets. Do you think that'll shift the kind of the not just the power dynamics, but like the way that clients interact with one or more advisors? If I don't have to basically trust someone and send them my assets before I can see that I'm getting value from them. How do you see that changing these dynamics? Traditionally, I mean, registered investment advisors have some of the lowest attrition rates with their clients. Like when a client starts working with a financial advisor, they work together for years and years and years. Do you see that changing in this new world of non-custodial and on-chain wealth management? Whoever wants to kick it off.
Go ahead, Eric.
I don't even know where to start there. I think from what I've seen more from the traditional side, relationships don't just start and end. It is a different dynamic if arguably an advisor in this case has a lot less control, right? Typically I would have an account open at Schwab or TD or Fidelity, and we're taking on that approach of using that as a custodian. We're making the trades. We're doing everything for that client. In this case, it's quite different. I think when people find that they're not considering things like estate planning, which sounds maybe boring, but how many of you have tokens that have actually even considered this? I have a wife who thinks I'm a little crazy when it comes to crypto. She has no idea how to run my ledger. And I have instructions, but will it be abided by? Will it be understood? Maybe not. So it's an eye-opener for everyone in the room, because I think we all are living the same life. The reality is, are you considering that as well as you should? And then it starts to pick at all these different layers of planning to where I hope and I think people will realize, holy shit, there's a lot more that I'm not really fully considering with my overall plan. And if I want to work in Web3 or truly have the life I want with my tokens and to do things where I have that much control, there's a lot that you have to really account for. And we're noticing that this is a unique niche where there's a gap. And from everyone I've been speaking to, even at the conference, there's a lot of, I think, aha moments. I hope some of you are having that today.
I see financial advisors as being co-pilots with a lot of people that have self-custody assets, because today, I mean, if you just think about your own social networks, a lot of people have financial advisors because they don't want to make those investment decisions alone. You might try to make some with like a robo-advisor or other, but it's really powerful to have a registered investment advisor with you to make those decisions. But how do you trust them? And that comes through reputation that's built over time. And we see that as attestations become adopted as a technology, that people will be able to see that Eric has clients that they trust, and you're not just trusting the advisor who says that they do a good job and they have that type of performance for their clients.
Completely agree. We're coming up to time. Any last bit of alpha to share with the audience before we get off the stage?
Oh my God.
In 10 seconds.
23-second alpha? Oh my God. All right, I'll try to run through this as quickly as I can. A lot of what I suggest to people is to have 3 to 6 months of living expenses in reserve somewhere. Think about your situation right now. Do you actually have that? And are you doing that off-chain, this 6-month treasury? Are you doing that in a high-yield account that's getting 4+%? Are you doing that through some other method on-chain, through Uniswap? When you look beyond that at even cover, are you doing cover on some of your positions? Are you considering your risk with certain type of firewalls that exist, or different ways to have things that are legible when you're actually signing, so you actually know what you're signing? All these things exist in this space. I would say feel free to find me later, and I could give some more of this alpha where we have more time off stage. And I would say last but not least, consider looking beyond today, but looking into the future, and think of some of the solutions where you can actually set up beneficiaries. Gnosis Safe is working on this. Per some of the conversations I had yesterday, they're looking to set things up where you can actually set up this chain reaction for beneficiaries, and that would be amazing. Same thing applies with what's being done at Webacy. Much more to share, not enough time, but definitely appreciate for everyone coming today.
10 seconds. Do your own research. Make sure that you find advisors that you trust. And my advice is to focus on education as well. The more educated you are, then the better decisions you make, regardless of if it's an advisor that's helping you do that or not. So education is probably the most important thing that's lacking. And our last minute alpha is we just launched on mainnet today. Woo! And we thanks. And we have a happy hour at the Bar and Grill, which is right here at the front entrance between 4 to 6 p.m. if you want to learn more about attestations and our public good for that.
Thank you, Bryce. Thank you, Eric, for joining us, and thank you to the audience
for having us.